Hey guys, Rhett here. Thanks for watching. Have a really important message to talk to you today about. And if you invest in the stock market, you 100% need to understand this. So if you're watching this video right now, it's probably because you are motivated, you are driven, you want something better than what you're currently in. You want to create something that will ease your transition into financial freedom. You want to build something that'll create generational wealth for you and your family. And you want to be able to quit that 9-to-5 job that's dragging you down, where you can have more income coming in by doing less. And that is what we're trying to do here. And that is what we're doing. That is what my clients are doing on a literally an everyday basis. We're getting closer and closer to that. And I'm holding their hand through that whole process, which is my coaching program. And if you're interested in that, shoot me an email below. We can talk about it. But I want to talk today about the stock market and how it relates 100% to Section 8. So if you have money in the market right now, you're not very happy, because every time you open your E-Trade account or your Robinhood account or whatever it is, you say, holy crap, why is everything red, and what does that mean? Well, you know that it means that things are not going well. And with the energy crisis going on in Europe, and with the war in Russia and Asia, and all the craziness going on there, and the hyperinflation that we're seeing here, and all the BS and everything going on here, it is a miserable, miserable situation for your money, okay? Now, in the market, when things go bad, does anybody know what goes up most of the time, or what stays completely still as a way to hedge against the market? If you said gold, you're right. And if you look at the price of gold versus any time there has been inflation or a market crash, the price of gold has gone up exponentially, okay? And if it hasn't gone up exponentially, it has stayed at a relatively safe price, okay? So gold is a great hedge when the market goes bad, okay? A lot of people move their money into gold when they think that things are going to go down. Now, Section 8 real estate is the gold of the real estate sector, okay? So when things are bad in the real estate market, and nobody's using Airbnbs, and there is a extremely high interest rates, and people aren't buying flips anymore, and things are going south rapidly, Section 8 is where you want to be. Because whether things are going really good, Section 8 is good, right? You look at the past couple of years, Section 8's been great, and the real estate market's been the hottest it's ever been in history, and Section 8's been incredible still. During COVID, the real estate market, when it first started, was going downwards, right? I'm not talking about midway through COVID where it started heating up, and end of COVID where it was on fire. But immediately when COVID began and all the rent moratoriums kicked in, and median income rental properties were worthless because you didn't have to pay rent, Section 8 properties were through the roof, okay? So let's talk a little bit about why that is. Section 8 is the rent is guaranteed, right? It acts as a regular piece of real estate where you can refinance it, you can pull your equity out of the property, it'll continue to appreciate like a normal real estate asset. But what it does differently is that cash flow every single month is guaranteed. And that's something that nothing else can do, right? Nothing else can touch that. That is what sets Section 8 so far apart so many other different kinds of investments in this sphere, okay? If you have Airbnbs, if you have median income rental properties, if you have high luxury rental properties, if you do flips, whatever you do in real estate, it's higher risk. Airbnbs are extremely high risk. Flipping property is extremely high risk. And then kind of as you go down that line, you come back towards, regular cash rental properties are a little bit lower risk. And then you have, high luxury net worth rentals, which are even lower risk than that. and then you have different kinds of real estate. At the very bottom of that, you have Section 8 because it is the most insulated against risk of any kind of real estate acquisition you could buy. It is literally the gold. If you buy gold right now, the price of gold may go up, it may stay still, but as markets crash and as things get bad, the price of gold will remain the same or go up. So it's extremely, extremely important to make sure that for the amount of risk that you have in your portfolios, you have something stable. You have stability. You have, if you guys are fans of cryptocurrency, which is gambling in itself, you understand that there are coins like Bitcoin, there are coins like Ethereum that are higher risk, that fluctuate in price, but there are what's called stable coins, where when you're not comfortable, you can move your money from Bitcoin and Ethereum to stable coins, okay, where the price doesn't fluctuate. So finding something that is a hedge against everything else is extremely important for you. And it's not only the fact that it's important, but it's necessary. If you don't have Section 8 in your rental portfolio, you're taking on just too much unnecessary risk. And if you have the money and if you're buying properties, and we talk about in videos how my clients get into properties for as low as $15,000, and that's with a 30-year fixed rate loan. I mean, come on. You need to have Section 8. And I don't care if you have all Section 8. I don't care if you have all cash rentals. I don't care if you have all Airbnbs. Regardless, you need to have Section 8 in your portfolio. You're just being naive. You're not being very smart. You're not being a strategic investor if you're never planning on the worst case scenario. With Airbnbs, if you owned an Airbnb at the beginning of 2020, you know what I'm talking about. If you owned a straight cash rental, that your tenant was covered under a rent moratorium and they didn't pay rent for a certain amount of time, you know what I'm talking about. If you were an investor that had a cash tenant who after COVID or during COVID said they couldn't pay their rent anymore and you couldn't evict them because they were protected under our judicial system from eviction during coronavirus, you know what I'm talking about. You might think that you have a safe investment because you vetted a tenant, but the reality is, and what we saw in 2020, especially in some of the low-income cash rentals that weren't Section 8, if somebody has to make a choice between feeding their family and paying their rent, guess which one wins every single time? If you have to put your kid through college and you have a trip planned to go stay at an Airbnb in San Diego or an Airbnb in Los Angeles or an Airbnb in Miami, and all of a sudden things go bad and your 401k falls and your investments in the stock market drop, guess what is winning between that Airbnb that you were planning on staying in, that trip to the beach, or paying for your kid's college? Your kid's college. So you have to keep in mind that a lot of the investments that we might get into, there are failure points in those, and there are things that are out of our control that can contribute to that failure. So it's not worth putting all of our eggs in that basket when we can still own those, and owning those are great as long as we have something that is stable behind them. So if that worst case scenario happens and people stop using our Airbnbs, which, guys, in a recession, you might not realize it right now, but as things continue to get worse and worse and worse, people are going to stop traveling. That's the first thing that people cut out of their budgets is traveling expenses because it's unnecessary. Airbnb will take a hit. You look at what's going on in all these cities right now. Airbnbs are cracking down tremendously. They're creating laws and rules to make it even harder and harder to get Airbnbs. So we have to have, and I have some great clients who are so freaking smart, who have a ton of Airbnbs, who want to start creating the Section 8 portfolios inside of their portfolio because they understand that there's significant risk in Airbnb and there's significant risk in cash, straight cash rental property. So guys, the bottom line is, when you're investing, you need to make sure that your money and that your investments are spread to where it's going to keep you safe. And the safest place to put your money when things are good, when things are bad, is Section 8. So when you want to get started, shoot me an email below. We'll get you up and running, and we'll get you going in the right direction. We'll see you next time.